Let's take a look at the equity method from chapter 16. So, when you're dealing with stock investments, you have to make the decision as to whether you're working under the cost method or the equity method. And the way that we decide that is based off of how much ownership in stock you have. So, if you have between 0 and 20%, that's the cost method. And if you have between 20 and 50%, because you have that significant influence, you change up how you value these investments, and we use what's called the equity method. So we need to prepare the journal entries for Knoller Company for the following transactions. So the first one, Knoller Company acquires 25% of the common stock of Lauer Company for $150,000 on January 1st, 2019. And then at the end of 2019, Lauer Company reports a net income of $180,000 and declares and pays a $50,000 cash dividend. So we have 25% ownership of Lauer Company. That puts us between 20 and 50, which tells us we now have to use the equity method. So we have a few different journal entries for these transactions. The first one, on January 1st, Knoller Company acquires $25,000 of the common stock of Lauer Company for $150,000. Well, your stock investments are going to go up, so we need to debit our stock investments. And we're using cash to buy this stock, so we credit our cash to show that our cash is decreasing. Now, how much? Well, you acquired all of that stock for $150,000. So we need to debit stock investments and credit cash for $150,000. Now, at the end of 2019, so there's two separate pieces that this problem tells you about the end of 2019. First, there's the net income of $180,000. Well, under the equity method, you get a piece of that net income. So the way that we record that is a debit to stock investments and a credit to revenue from stock investments. Now, do you get all $180,000? No, right? You only own 25% of this company. So you get 25% of their net income. So if we take $180,000 and multiply it by 0.25, you'll end up with $45,000. So we debit our stock investments, $45,000, and we credit our revenues from stock investments for $45,000. Now we have one last piece here. Lauer Company also declared and paid a $50,000 cash dividend. So our accounts here, you'll see cash as the debit because we are going to be receiving a cash dividend, and we credit our stock investments. Now, once again, do you get all $50,000 of this cash dividend? No, right? That's $50,000 to all of their shareholders. You own 25% of the company, so you get 25% of this cash dividend. So if we take 50,000 times 0.25, we'll end up with 12,500.